Welcome to Geopolitics Universe. In today's video I will be discussing and explaining how the new partnership between China, Russia and Saudi Arabia will crush the US economy. But first, I would just like to welcome you to Geopolitics Universe. This is a channel where we share the latest news, rumors, and insights into all things on geopolitics. You'll be able to find news surrounding all things to do with geopolitics. I would really appreciate it if you could please like and subscribe. Also, I just wanted to announce, as we are a new channel which is growing by the day, we will be launching a giveaway for a $50 Amazon gift card. All you have to do to enter is like and subscribe. The giveaway winner will be announced in due course. Now let's carry on with the video. The world's economy still runs on oil. It provides a third of all global energy and fuels over 90% of transportation. Cheap energy drives economic growth while rising oil prices act like a regressive tax on everything and everyone. Wars and elections are still fought over oil fields and gas pipelines. Consequently, the emergence of a new axis of oil is strategically significant. It will affect geopolitics, the global financial system and the environment. China is the world's largest oil importer and well on its way to becoming the world's largest economy. Despite building more coal-fired power plants than the rest of the world combined in 2020, China's oil consumption continues to grow. On the other hand, Russia and Saudi Arabia are the world's two largest oil exporters. They are China's biggest suppliers, and both plan to increase their oil exports. The energy axis that has emerged between Beijing, Moscow and Riyadh is based on solid economic interests and has begun to develop a political component. In 2014, the West imposed punishing economic sanctions on Russia for annexing Crimea. One very predictable result was dramatically increased Sino-Russian economic cooperation, particularly in energy exports. The Power of Siberia gas pipeline, which became operational in 2019, now carries some 38 billion cubic feet of Russian gas to China each year. At this year's Winter Olympics, Presidents Vladimir Putin and Xi Jinping announced that Russian gas exports to China would soon increase by 25% while oil exports would rise by 12.5%. And Xi also demonstrated a new level of political cooperation, declaring that the friendship between Russia and China knows no bounds. In a major break with previous Chinese policy, Xi backed Putin in his confrontation with the United States over Ukraine by issuing a statement opposing any further expansion of NATO. Both economic and political issues will likely push Russia and China toward closer cooperation. During the Cold War, Saudi Arabia, the custodian of Mecca and Medina, stood firmly with the West and refused diplomatic relations with the atheists in Moscow or Peking. Times have changed. China, not the United States, is now Saudi Arabia's largest trading partner and Aramco's biggest customer. Last year Saudi Arabia's exports of oil to China exceeded even those of Russia. While the US still provides the majority of Saudi Arabia's military equipment, it is China that has provided ballistic missiles and the technology to manufacture them locally. One of King Salman's most significant achievements has been creating new levels of cooperation with Moscow, especially in oil markets. Since November 2016, Saudi Arabia and Russia have led the alliance of oil producers known as OPEC+. As the two members with the most production and spare capacity, Saudi Arabia and Russia have often worked together to influence oil prices. Then, last August, Riyadh signed a major military cooperation agreement with Moscow that is now helping develop Saudi drone capabilities. The dollar's role as a global reserve currency allows Washington to run chronic budget deficits, secure in the knowledge that it can borrow easily. For decades, the commitment of Saudi Arabia and its Persian Gulf allies to price oil exports in dollars has supported the dollar's privileged position. If the world's largest oil exporter and consumer ever decide to conduct their trade in some other fashion, they could undermine American dominance of global financial markets. Russia and China have made no secret of their wish to displace the dollar, and they already price more than half of their energy transactions in other currencies. Might Saudi Arabia join them? For decades, the United States has been the foremost foreign military power in the Middle East. It still is. However, Russia now has a military presence in Libya and Syria. China has built a naval base at the mouth of the Red Sea and a major port in Pakistan. Saudi Arabia feels threatened by Iranian involvement in Yemen, Syria and Iraq. The rapid collapse of the Afghan government has caused the Saudis and other Gulf states to question the reliability of American security guarantees, a fear Moscow and Beijing hope to exploit. Moving closer to Russia and China economically, and increasingly unsure of America politically, the Gulf states are trying hard not to take sides in the next Cold War. Oil demand is returning to pre-COVID-19 levels, and, according to the International Energy Agency, it is likely to rise throughout this decade. Yet increased taxes, regulations, pipeline cancellations and social pressures are all reducing investment and thus oil supply. America is no longer energy independent. The transition away from hydrocarbons will take time, and it is not clear whether higher gasoline prices will encourage or retard that change. When President Joe Biden and National Security Council Middle East Director Brett McGurk recently asked the Saudis to break their agreement with Russia and pump more oil, they were politely rebuffed. If we wish to lower gasoline prices and preserve the role of the dollar, we should end the war on hydrocarbons and improve our relations with Saudi Arabia. Also, Saudi Arabia is in active talks with Beijing to price some of its oil sales to China in yuan, people familiar with the matter said, a move that would dent the US dollar's dominance of the global petroleum market and mark another shift by the world's top crude exporter toward Asia. The talks with China over yuan-priced oil contracts have been off and on for 6 years but have accelerated this year as the Saudis have grown increasingly unhappy with decades-old US security commitments to defend the kingdom, the people said. The Saudis are angry over the US's lack of support for their intervention in the Yemen civil war, and over the Biden administration's attempt to strike a deal with Iran over its nuclear program. Saudi officials have said they were shocked by the precipitous US withdrawal from Afghanistan last year. China buys more than 25% of the oil that Saudi Arabia exports. If priced in yuan, those sales would boost the standing of China's currency. The Saudis are also considering including yuan-denominated futures contracts, known as the Petrol yuan, in the pricing model of Saudi Arabian oil company, known as Aramco. It would be a profound shift for Saudi Arabia to price even some of its roughly 6.2 million barrels a day of crude exports in anything other than dollars. The majority of global oil sales, around 80%, are done in dollars, and the Saudis have traded oil exclusively in dollars since 1974, in a deal with the Nixon administration that included security guarantees for the kingdom. China introduced yuan-priced oil contracts in 2018 as part of its efforts to make its currency tradable across the world, but they haven't made a dent in the dollar's dominance of the oil market. For China, using dollars has become a hazard highlighted by US sanctions on Iran over its nuclear program and on Russia in response to the Ukraine invasion. China has stepped up its courtship of the Saudi kingdom. In recent years, China has helped Saudi Arabia build its own ballistic missiles, consulted on a nuclear program and begun investing in Crown Prince Mohammed bin Salman's pet projects, such as Neom, a futuristic new city. Saudi Arabia has invited Chinese President Xi Jinping to visit later this year. Meanwhile, the Saudi relationship with the US has deteriorated under President Biden, who said in the 2020 campaign that the kingdom should be a pariah for the killing of Saudi journalist Jamal Khashoggi in 2018. Prince Mohammed, who US intelligence authorities say ordered Mr. Khashoggi's killing, refused to sit in on a call between Mr. Biden and the Saudi ruler, King Salman, last month. It also comes as the US economic relationship with the Saudis is diminishing. The US is now among the top oil producers in the world. It once imported 2 million barrels of Saudi crude a day in the early 1990s, but those numbers have fallen to less than 500,000 barrels a day in December 2021, according to the US Energy Information Administration. By contrast, China's oil imports have swelled over the last 3 decades, in line with its expanding economy. Saudi Arabia was China's top crude supplier in 2021, selling at 1.76 million barrels a day, followed by Russia at 1.6 million barrels a day, according to data from China's General Administration of Customs. A senior US official called the idea of the Saudis selling oil to China in yuan highly volatile and aggressive, and not very likely. The official said the Saudis had floated the idea in the past when there was tension between Washington and Riyadh. It is possible the Saudis could back off. Switching millions of barrels of oil trades from dollars to yuan every day could rattle the Saudi economy, which has a currency, the rial, pegged to the dollar. Prince Mohammed's aides have been warning him of unpredictable economic damage if he moves ahead with the plan hastily. Doing more sales in yuan would more closely connect Saudi Arabia to China's currency, which hasn't caught on with international investors because of the tight controls Beijing keeps on it. Contracting oil sales in a less stable currency could also undermine the Saudi government's fiscal outlook. Some officials have cautioned Prince Mohammed that accepting payments for oil in yuan would pose risks to Saudi revenues tied in U.S. Treasury bonds abroad and the limited availability of the yuan outside China. The impact on the Saudi economy would likely depend on the quantity of oil sales involved in the price of oil. Some economists said moving away from dollar-denominated oil sales would diversify the kingdom's revenue base and could eventually lead it to repeg the rial to a basket of currencies, similar to Kuwait's dinar. Thanks so much for watching till the end. Please like, comment and subscribe and turn the notification bell on so you never miss a video. I would really appreciate it if you do this, as it really helps support the channel. On this channel we share the latest news, rumors, and insights into all things on geopolitics. You'll be able to find news surrounding all things to do with geopolitics around the world and more. Until next time, see you later.